Okay, good morning, folks. Just having a couple of technical issues as you. Okay, morning, folks. Just a quick sound check. Make sure you can hear me okay. Right, just a quick sound check, please. Anyone can hear me okay? I'll come through. Am I coming through okay? Should be working. Yeah, okay. Okay, morning, guys. Just looking at the markets overnight. Now, I just had to go offline before the Trump tax review last night, and clearly the markets were. It was one of these cases of buying the rumour, selling the fact. You know, the markets are getting quite excited beforehand, as the Treasury Secretary was talking in the afternoon about about the intricacies of the tax plan, and of course when the press conference came out and so forth, the dollar has come off, and the dollar has basically not really reacted too well to this. I mean, you know, the Trumpflation that got us up here in the first place. You know, we're almost back to those levels now, as we know. You know, we were really looking for some major meat on the bones here, but you know, at the end of the day, the market is pretty wise. Market players are pretty wise, and they're sort of, you know, basically realizing that, you know, this is great on paper, but how is he going to get all this through? You know, so it's a matter of, you know, it sounds great, but can he actually push it through? And of course, you know, his plan is to cut taxes, which would increase spending, get spending up to over 3%. IMF think that he's being over optimistic. Maybe he is, but yeah, I mean, he's got to pay for this somehow initially. He believes that that spending will be paid for by economic growth. Well, you know, that's all sort of like down the line, jam tomorrow, if you like. So so the dollar's basically reacted negatively to it, and I think that's mostly the right thing. What we've also seen, and we'll look at the Canadian pairs in a moment. We've also seen overnight the strength of or overnight, but yesterday afternoon, US time, and sort of late evening, just pre-Asian session, we saw the this Canadian dollar have a big spurt up on the back of, I'm sure you all know this actually, but some of you don't read the news, on the back of that Trump has announced that they're not pulling out of the NAFTA, North Alliance, North American Free Trade Agreement. At the moment, they're not pulling out of that, and obviously that affects Mexico and Canada. But the day before, if you remember, we saw the import tax levy on lumber. You know, talking about potential on dairy products as well. But they're not pulling out of the NAFTA agreement just yet. So the Canadian dollar seems to have liked that, which and we've got reasonable firm oil prices as well. But retail sales came in lower than better than expected in Canada as well yesterday. We've got GDP out, I think, tomorrow. I think GDP. But Canada's like this, and I'm just not convinced, you know, that what Trump says and what Trump does are necessarily on the same page. So this knee-jerk reaction in the Canadian dollar possibly gives an opportunity for me. I mean, you know, continuation of the weakness of that currency, as with the New Zealand currency as well. That is a currency that's basically been dampened over the last few trading sessions, and it continues to remain a weak currency. If I just pull out the strength meter here, the sun's shining on these screens, which I shouldn't complain about, I guess. This is the daily. So here you've got this is the daily now, so it doesn't react as clearly. It doesn't react as quickly to the others. But the Canadian dollar, this little spurt up here, is the NAFTA. But the Canadian dollar still is the weaker currency in terms of the basket, in terms of longer term. And the Canadian dollar, we know about the Japanese yen, the flight to risk on. That's been the way it has been for a while. You know, from basically a couple of weeks now, we've been in that downward trajectory. And the New Zealand dollar. So New Zealand, Aussie, Jap, and Canadian are the four weakest currencies out of the basket. Now, sometimes I like to span out to the hi Shay Baby, hey Yo-Yo, morning Urali, morning Sungate, morning Siami. So I like to look at the at the daily to sort of give a broad picture of what is generally weak and generally strong. So Canadian dollar is still the weakest currency, followed by the Japanese yen and closely followed by the New Zealand. So I'm also looking at opportunities in the New Zealand dollar today. Now, all important news, of course, today, the biggie is the ECB announcement at the rate decision, which is not expected to see anything, comes out at this is BST, British Summertime, is 12:45 British Summertime, which is 1:45 GMT. No, 11. Sorry, I always get confused with these. So it's 1:45 GMT, 12:45 BST. So 12:45 London time. And then we've got and they're not expected to move rates, of course, over the actual announcement. But the press conference that follows at 1:30, which is also the same time that US durable goods comes out and the weekly unemployment claim. So 1:30 is the time to be at your screens. Chances are I'll come on and leave the. I'll stream over the announcements just to see if we have any big moves. Sort of like we'll have a little chat at 1:30. So try and pop on for that. So all important news. Now there's two schools of thought. Initially we saw sort of analysts talking in the week that after the French elections we're going to see, a change in stance in terms of their sort of outlook and in terms of their hawkishness. If you remember last month or last 2 weeks ago, after the statement, they were apparently misinterpreted in their hawkish stance, and the markets put on a couple of hundred points on the back of their comments, which proved to be the market misread it apparently. So Joey came out and corrected that, and of course we came back down again. So they're going to be very cautious this time of their wording, which makes me think that they are, we can only speculate of what's going to come out. And I look at other analysts. I don't necessarily agree with the other analysts that are saying that we're going to maybe see a turnaround in their hawkishness in terms of projection of tapering sooner rather than later. I think they're going to be more cautious about that, and I don't think the euro is necessarily going to be the underpinned as much as maybe the market's thinking. However, I don't necessarily trade what I think, as you know. I trade what I see on the charts. I am still long the euro yen, which we'll talk about in a moment. But that's basically my view of what could possibly come out of that. But it's really could go either way. But either way, it is going to be, I think, a volatile period. You could see 50 pip move in the euro against the dollar, against the yen. So I think it's quite an important one on the aftermath of the French elections. Just reading some of the wires overnight, as we know, there's always risk in the market. Le Pen, Macron. We're talking possibly about Macron's getting off to a slow start, and Le Pen sort of pushing ahead. I haven't seen any opinion polls out today, but so there's always talk about that as well. So any strength in the euro at the moment is going to be resisted, I think, to the upside. I'm certainly aware of that in my euro yen pair, which I'll look at in a moment. Just have a look, see if we've got any opinion polls out this morning. Nothing out this morning. So we're also seeing potential sellers in the euro dollar above the 110 level against the euro. Okay, let's have a quick look at the charts. Gold. Hang on, let's just have a look at the chat as it come in. Otherwise, I'll miss it as it scrolls away from me. Any views on gold? Yeah, we'll look at gold. May touch 172, go down to 150, but this is an aggressive shorting of the North Korean threat. Well, the North Korean threat, well, we'll talk about it now, you've mentioned it. North Korean threat hasn't actually, nothing's happened overnight in this. Of course, the North Korean threat is still there, and of course they pulled all the senators into the White House yesterday to talk about the North Korean threat. They're talking about increasing sanctions and so forth. Gold is at this key level in gold for me is the 1255. Okay, 1255. If you break 1255, then minor support or structural support at 1250, psychological support I should say at 1250, but then possibly back down to the 1200s. However, that I think you need to see, you need to see considerable risk on, and at the moment, that's not happening. So 1255 is the level that I think could support gold. Back to your question, it's the 200 DMA. It's this level of structural support to the left of the chart. So it was the old resistance here, now support, and support back here from last year. This is of course the for the daily chart. So 1255 is a key level. As North Korea concerns linger, there has got to be support down here as far as I can see. So I'm not a seller of gold. I'd rather let gold do what it wants to do, but I wouldn't be selling it personally. I'd rather play this as I have done this week. I got stopped out actually. I got stopped out after the French. I was long gold last week. Got stopped out on Sunday night as the French reacted, or the markets reacted to the French first round. But I got stopped out around this level actually, 1266. In fact, it was this bang on this level. 1266 was my stop out level. But look to get long again at 1255 for me. I think in gold. While you're on the subject, so I won't dwindle on that too much more. You need to see a really big spurt in move up to the upside in dollar for this to start retesting the 1200 level. So I don't think that's necessarily on the cards at the moment. Right, let's have a look at the charts. I'm just going to go back to my to where I am. I've had this on for a few days now, a couple of days. I'm more than likely going to I'm more than likely going to exit this trade over the ECB. I don't necessarily need to hold this over ECB, to be honest. It's you could see 50 pips, and in fact I am going to exit this over the ECB. I've got to, I'm short euro pound as well, which basically puts me down, but basically I guess long pound yen at the moment. But I'm short euro pound, which I'll run. But the euro yen, I think I'll get out of this before the. So it was a trade idea for Monday or Tuesday. I think it was. So if you're in it, you don't have to follow me, of course. But I'm more inclined to to get out of this before the ECB announcement, I think. Had the ECB announcement not look just yesterday, we talked about this level to the upside. I mean, for those of you that follow me religiously, so sorry to bore you, but I pulled this level up yesterday, and it's not. This is the purpose of this is not to say how great I am. It's just to point out the powers of these extension levels that you see in the Fibonacci sometimes, more often than not. In fact, I'm not a big fan of the 23.6 or the 38.2. I'm aware of them on charts, but I am. The reason why I use the Fibonacci tool more than anything is the 50% retracement, which, as we know, is not Fibonacci. It's a retracement level. But I like the 50% retracement level, and I also like the extension levels. So the 50% or the 100% extension level. 100% extension level, of course, it's a 50% reversal level on the way down. So 100% extension, but also the 161.8 extension. It's just a remarkable level that always seems to have confluence with structures as well to the to the left of the chart. So I just basically pulled a fib level from the French opening after the elections down to the low, took the 161.8 up, and bang on, it gave the exact to the almost to the sniper level. The support, the resistance of the euro yen to the to the upside. I mean, if you had to call that, we placed this when it was down here. to call this almost to the pinpoint. Okay, it's just ahead of 122, so you might say that's a easy place, but it happens to be the 161. So yeah, so euro yen. I mean, had I not been in the euro yen, and if nothing major happens, then a re-entry for the euro yen, 1277, 120.77 level. I'm not going to take it because of the ECB. I think there's other plays you can play around with now. But no, excuse me, the 120.75 level, I think could be a level that could hold. That's why I placed my initial stop. What is it? Say 15 pips below. I'm not a fan of placing stops 2 pips, 3 pips either side of levels, because that's what all the educators tell you to do. That's what all the so-called mentors tell you to do. Place 2 to 3 pips either side of key levels. I'd rather reduce my size somewhat and place it 15 pips away on a longer term time frame, of course. So that's the euro yen. The other trade I'm in is the euro pound. So you could say that I'm effectively long pound yen, which I am at this moment, of course. I beg your pardon, I'm not in this one. I'm theoretically in this one in terms of those 2 positions on I have at the moment with the exact same lot size. So it basically puts me long pound yen. Long pound yen, I still like this trade. An entry possibly, if you're not in here at the moment. I know some of you are. Getting back in at 143 handle below here. I still think the pound is the undervalued currency at the moment. Yen still has the risk trade in fact in there. So you're seeing a continuation of this. And I'm just stalling here in my thought process. I'm thinking if I keep those 2 trades on, then I might as well just keep the 2 trades on that I'm long pound yen. I'll reassess it. Let's have a look at the euro pound. Okay, so I'm short euro pound. It's moving in my favour this morning. Okay, I've been offside here yesterday, traded up to 84.95. So I was offside by the same amount that I'm onside at the moment. Yeah, there's nothing on it, 20 pips. In terms of technicals, still like being short this. Still like this downward move. Still want to get into it. We came back into this level of resistance. Happy to be short there, and stops above, significantly above this swing high into this sort of no man's land. So my stops are quite up, quite happy to be up there for a retest. Now this is not going very far at the moment. I actually noted that a couple of hours ago, it looks like Jason also put a trade idea out on euro pound short as well. So it's nice to have both of us on the same side. We sometimes agree on trades, which is good. So he's short that as well. We'll look at some trade ideas briefly in a moment. So short euro pound, effectively long pound yen. So let's have a look at how you could possibly take advantage of this overreaction in dollar against the CAD. This is the momentum counter to the downside when it was announced that Trump was not going to pull NAFTA yet. This is, remember, Trump wrote this book, didn't he? The Art of the Deal. Trump never puts his first hand out, initially on the table. He's always leaving something. Whatever his decisions are, it's for the next wave of decisions. So I just think, he's a great businessman. He's a wonderful businessman. But he's got the art of the deal. So whatever he says today doesn't necessarily mean it's what it is. That's the way I look. That's how I read Trump. So he's always got a motive in terms of what, the next level. So this type of overreaction today, for me, there's a motive behind it. I think personally, dollar CAD at the moment. I think CAD. I think he is going to target CAD. I think he is going to make a. He's going to put the import duties on lumber. He's going to look at those, and it's been something he's been talking about in his pre-elections as well. So, where did the fallout or the rise in CAD stall? It stalled exactly at the 50% level again. You remember this is the 50% level of the just the 4-hour chart. If I just put that, I'll come back to this in a second. But if you look at the move here from the low to the high, it took 3 days to get up there, and basically gave it back, or 2 days to get up there, 2.5 days, and gave it back in pretty much one candle, 1 hour, or one 1 hour candle. Where do we stop the pullback? Exactly at the 50% level of the recent rally. Okay. This is why I'm not trying to get people away from technical indicators so much, but seeing what price is doing in terms of price action. This is just for me is as powerful as any technical indicators. The 50% levels, pullbacks into a continuation of a trend, are just respected levels every time. And if you need to look for targets, 50% extension targets, again, good levels out of breakouts. So here we are at the moment. If we get back down to the 20 pips down on the downside, dollar CAD. I'm going to put this on the trade idea when I get back to the screens. I've got to attend to some. You should work at a broker's dealing desk. No, I've given up working CPA. I used to work for an investment banker for 20 years. I've given up working for other people. So I would be inclined to consider getting long US dollar against the Canadian dollar if we have another pullback into this area. I think your stops are reasonably obvious. A 50 pip stop for retest of the back up to the levels of Canadian weakness gives you a 2-to-1 risk reward ratio. So I don't think that's necessarily a bad trade. The ATR on the US dollar CAD on a 1 hour on a 1 hour is 23 pips. So 2 ATRs is a reasonable stop. Remember, I've said in the time, if you're trading off a 1 hour chart and whatever time frame chart, 3 ATR basically is a time. I think you got to some point put your hands in the air and say, no, I got that one wrong, move on. And I think I use my ATRs for that as a guide. It keeps me on a straight and level, rather than just people sometimes move stops, and the biggest thing I say to stop movement is never move stops in terms of against you, i.e. increasing potential loss. You can move stops, of course, to lock in profits. I've got a theory about that as well in terms of moving them too quickly. But if you're having trouble placing stops, just admit you've got to, and you don't know where to place your stops. Just call an ATR, and just religiously do the same ATR, whether it's 2 ATRs. 3 ATRs. If you're wrong 3 ATRs, you've got to at some point say, I got this market wrong. So that's where stop on here. 2 ATRs stop on a dollar CAD takes you out at 50 pips stop. If you buy in at 135.25, gives you a stop at 134.75. So dollar CAD. Someone mentioned euro dollar. No, euro dollar. Yeah, this is all. Euro dollar seeing anything above. Euro dollar seeing sellers coming in above 109, and it's 109.50 to 110. Well, let's take that out a bit further. 109.50 to 110.50 is going to have, I think, considerable resistance to the upside ahead of French elections. So that's over the next 2 weeks, week and a half. Okay, it's going to have considerable, because there's risk there. Le Pen is a risk factor. Macron's going to walk this by the looks of things, but there's talk across the news wires. There's analysts talking about the Macron making a slow start and so forth. Le Pen is a risk factor. So any strength above 109.50 to 109 to 110.50 is going to find resistance. So for me, this is not a massive against the US dollar. So this is to me not a massive runaway trade, the Euro USD. Now, if the US dollar was crashing like a stone, yeah, I get it. But at the moment, the US dollar is flatlining. So this is a pure euro play, as opposed to trading the the euro. Japanese yen, for example, where you've got two currencies working against each other. You've got the euro strength, which we are seeing is the strongest currency across the board, but the yen is the weakest currency. So that pair I can look at. The dollar is flatlining, so it's not the best pair for me to be looking at the moment. I mean, it's the most widely traded pair, as you know. It's 88% of all foreign exchange transactions have the US dollar on one side, 33% have the euro on the other on the side as well. So you can assume that the euro USD is the most actively traded foreign exchange pair. I think it's about 28%, something like that. But for me, I'm just leaving out of this one at the moment. I think it's highly likely. I don't use that word. It is highly probable that you can see yourself getting back into this area here, this area of consolidation that we saw initially after the Le Pen Macron standoff or result beginning of the week. So there's every possibility that the euro could just like grind lower into here, just on the back of not very much. So I'm not playing the euro dollar to the upside at the moment, but the bias, of course, is that way. I'm also hearing bank sellers above 110, so I don't know if that's still relevant or not. Maybe someone else could advise me on that, but I was hearing that earlier in the week. But bank sellers above 110. I heard that. I just want to have a quick look at the New Zealand dollar. Now, New Zealand dollar is shaping up for a continuation of a sell for me. Okay, just picking it against the US dollar. I mean, the same theory applies in terms of moving currencies. But if the New Zealand dollar pulls up this strength, remember this pulling up is not on the back of any significant dollar weakness. It's this is purely New Zealand strength on a recovery from this move, and this move was basically the Trump levy on Canada lumber. This is this move. We're now putting back into here. But we are in a downtrend. So anything back up to the 69.40 level. This is a level. It's only 25 pips away. That's this is the 1 hour chart. ATR is 10 pips, 11 pips. It's only a couple of ATRs. The 4 hour ATR is literally 25 pips. So it's very likely, or I've used that word twice today. It's very possible that we could get back into here. This is the level that I could consider selling New Zealand USD. Conversely, if you want to play the New Zealand dollar continued weakness, being the second weakest currencies, seems to be escaping people's notice at the moment, would be possibly buying pound New Zealand. Let's have a look at the pound New Zealand. Okay, this is the 1 hour pound New Zealand. Okay, so we've had this good, nice momentum move out of the breakout of the consolidation. Hit the highs of 86, 82, and we pulled back 90 pips to the low. We're now 65 pips from the low. This is this is a reasonable pullback. I mean, let's just have a scan out to the left on the daily chart. Not a lot going on there. So this is a reasonable pullback. Playing New Zealand weakness, look for a strong currency against it. Pound is, there's no real shock horrors in the pound at the moment. Nothing looming. We've got the Brexit negotiations about to start. We've got the elections coming up. Only positive stuff coming out of the UK on that. The pound's had a massive devaluation since the Brexit was announced back in June last year. So, you know, this is a trade that you might want to look at, indeed, to continuation. You know, you might even want to take it out, take it out further. Let's have a look. I'll have to jump off in a second. So longer time frame, you know, you can target 190 here. You know, that's 300 points away. That longer term trade, of course, 300 points away from the move from the low to the high as an extension. Let's see if that's relevant. Okay, to the left, it's stalled there a couple of times. 1618. Here we go. Look, 1618 extension takes you to this peak here. So this is, I mean, this is again, look, the 1618 extension from that move takes you to their, you know, the structural old resistance before, back from July last year. So there's a 300 point target on pound New Zealand. Longer term longer term play, of course. But if you want to take it on a shorter time frame, for 60 point pullback, you know, I think that's a reasonable pullback for continuation of the trend. You might want to do that on a shorter time frame and take a couple of ATR stops. So buy it here, which is with the 50 pip stop. You know, that's that would be a massive pullback, which is, you know, you're definitely wrong in that trade if you get stopped out from 50 pips from here. You know, that basically is a 5 ATR pullback from the highs. You know, that's almost a trend reversal. So you know you're wrong if you get stopped out there. You know, at the moment we're into these moving averages as well. You know, I don't trade off moving averages, but it's just another sort of level of confluence. So look at pound New Zealand. Right, and there's the strength meter chart again on the 4 hour. You know, it's the second weakest currency. Daily is the third weakest currency. So these three currencies are the sells at the moment. Aussie's not getting my focus that it got last week, but Aussie's still not something I can get too excited about. Seeing some numbers out in China as well. Oh, I think we've got Japanese governor speaking at the moment. Should be coming out soon. So we'll see if that moves the Japanese currency. Last time he spoke, Kudo spoke, he was talking about maintaining the stimulus plan, keeping rates at minus 0.1. So yen, you know, still the weaker currency. You know, you've still got the yield plays kicking in here. You know, you've got the ECB markets talking about ECB rising rates or cutting back on tapering, same thing, or increasing tapering, same thing, hawkish. Seeing the pound flying as we speak here. This is the pound on all pound charts, just looking here on all pounds. Pounds making a bid this morning against the Swiss, against the yen. So I'm digressing. So yeah, so Japanese, interest rate differentials. We've got Drahi talking about rate hikes, US rate hiking. UK Carney's talking, or they're looking at Carney's next move on rates. There's possibility of moving rates in the UK. Aussie's not really thinking about moving rates out anytime soon, nor is Canada. You know, so look at the hawkish environments. British pound, euro, US. Look at the low yielding currencies. Japan, Aussie's not moving. Canada's not moving. Right, I'll leave you that, guys. Still waffling, yep, always waffling. You can always turn me down. Right, so yeah, I'll be back on stream at the 1:30 for the ECB chat announcement press conference. So we'll see if anything happens there in the meantime. You know my positions. Highly likely I will be closing out my Euro Yen position beforehand, but I'll assess in a couple of hours time. As you know, my streams now this morning are pre-market opening for the next tomorrow. There is at 8 o'clock on the opening. The next 2 weeks after that, it's pre-market opening, 7 a.m. London time, only for 2 weeks, while I have to do domestic duties here on school runs and so forth while my wife is away. But I think it's quite good to get a bit of an insight before the UK opens as well, before London opens as well. I know it's also good for the guys that are listing in from the Asia Pacific region. Okay, guys, I'll speak to you soon and trade safe. Good luck.